Alrighty. Well, sorry that we started off late this week, everyone. We had a little bit of technical difficulties. Steph fell down a staircase. But you know what? There's better things to look forward to. And remember, nothing that we discuss here today on today's live stream is going to be financial or investment advice. We're not professionals. We're random individuals on the internet. You click the buttons that you click on your own wallets. They are under your control, unless you give us your seed phrase. If you want to give us your seed phrase, please put them in the chat. We'll take control of them if you really want. But regardless, nothing that we do is actually financial advice. Anything you actually buy based off of this live stream is your fault if it goes under to zero. All righty, let's get it going. Thank you guys so much for joining us on this week of the Byte Show. This week, we're going to be talking about a little bit more into the EVM world, into the EVM side of stuff. I know everyone's hyped up about what's going on with Arbitrum, but I'm going to shill my bags even further with what's going on in the Canto world. Adam, Evan, thank you guys so much for joining us. Evan, where are you? Are you in a submarine right now? Oh boy. Is he disconnecting a little bit?
My internet's a little spotty. I don't know if you guys can even hear me right now. Can you hear me?
Yeah, just briefly there for a second. It seems like you're hitting a little bit of turbulent water.
Well, yeah. So I'm, as we talked about a couple weeks ago, I'm in a boat sailing towards the Antarctic. I've been doing a lot of research on heavy computing power, and just the amount of heat that these computers give off requires us to, it's quantum, so you have to use basically an ice shelf as your cooling fan. And so I've been heading back towards I took a stop in Denver. Now I'm heading back towards the Arctic Circle here, which is why it's so dark, because I'm actually underwater in a boat right now, and sometimes we hit waves and sometimes the internet's bad. So apologies for any technical difficulties on my end.
Evan is studying how to crack all of our seed phrases right now, actually, with quantum computers. So
wow.
Last time we talk about crypto.
Oh wow. I'm scared of Evan now.
Yep. That's exactly what we're going for. But we're white hat hackers. So once we figure out how to crack all your seed phrases, we're only going to ask for a reasonable sum of 10 to 15% of your net worth, and then we'll return everything safely to you, and we'll keep your funds out of the hands of people that would take more than that, like 100%. We're just going to take 15 to 20%.
Yeah.
Only a slight rug, just a partial.
We'll just be a little bit poorer than we are right now in the bear market.
Yeah. As a total aside, what was the last big hack that happened? It was Euler Finance.
Euler Finance. Did
you see that somebody sent a message to the hacker and was like, "Yo, bro, you stole like 73 ETH. It was my life savings. Like, please, can you just send it back? Like, you got, however many ETH. I don't think it'll be a big deal." And the hacker actually sent the guy 100 ETH. Like, he begged for his money and he got it back, and he made money. So people were joking about BegFi last night on Twitter.
It's funny because he sends the same message to every hacker, and I guess this one finally paid off for him.
Yeah, it's good. It's a good move.
Damn. Yeah, the Euler Finance hack was wild. Apparently, there were two major auditing firms that missed that little component that let them basically create bad debt into the protocol. Pretty tough times. Tough times.
It was a cool I like the product a lot. I actually used it for the first time a couple weeks ago.
Oh no.
I didn't have any assets deposited now, fortunately, but yeah, I think they'll come back. Doing some pretty interesting things in DeFi, and
they have some good backing. They have some major good backing. Variant Fund is backing them. Commonly the major backer of Canto at the moment. So they have a good team around them. Hope they manage to figure it out. Obviously, DeFi is still a very wild westy world, and nothing that we interact with is going to be 100% safe. But I want to move on to conversation a little bit into greener pastures. Canto has officially pulled its major rug from going up to 70 cents, now back to 30 cents, which is horrendous. I feel bad for anyone who bought at 50 cents like an absolute scrub. They should have been listening to my shilling back when it was being farmed at 6 cents. But Adam, what's going on in Canto world? Have we been seeing a major rocket growth of TVL in the ecosystem?
No, not ecosystem wide. Canto had a nice explosive TVL increase, right after the variant announcement about their secondary market investment, which is pretty sweet for like a VC to go into a liquid token. And we still have, it's yet to be seen how they're going to promote the ecosystem and contribute to the ecosystem. But yeah, a lot of people noticed Canto for the first time after that announcement. So
Yeah.
yield farmers went crazy because you had these like you had the double whammy of like an increasing native token price and a triple digit APR. So you were just like making money on money. And yeah, I mean, all good things come to an end, obviously. I think the bubble, the euphoria, like you said, kind of popped at 70 cents, and it's retraced pretty significantly. I think like a 70% or 60% drop from the top. But we see this with, all crypto assets that get attention for the first time. People go in, they get real excited, and there's no buyers left, and people are left holding the bag. So TVL has been pretty steady. I think one of the more interesting, if you want to dig in a little bit, there's two things that happened in the last month on the TVL side, but more, I'd say protocol specific and token specific. So you have the first interesting, I'd say the first large TVL DeFi app launched on Canto, and that's Velocimeter. They are a velodrome fork, and as we know, like Solidly is the VE33 DEX that launched on Phantom last year, and it's now being forked like crazy across the ecosystem. So Velocimeter, for better or worse, looks exactly like the Solidly front end did from Phantom, and that kind of scares a lot of people who were involved in the space like back then.
Yeah.
But under the hood, it's working great. Like smart contracts, the approvals and the deposits and the claims were all working from the start. And they got to like, I think a 20 million TVL, which is
Wow.
pretty awesome for a Canto native app.
Yeah, for such a small ecosystem. That's really good.
And the dev team is small but focused and very open to communicating with the ecosystem. Originally, they were planning on launching on both Arbitrum and Canto. Like Canto was their test and prod environment, and they liked the Canto participants so much that they just said, you know what, this is our home. We're gonna stay on Canto and see what we can do. There's, like you said, greener pastures. There's a lot of blue ocean for the first successful EVM on Cosmos app chain.
Yeah.
So the TVL shot up. The APRs were nice and probably better than you could have earned in the native DEX. So smart yield farmers who are paying attention probably moved a lot of their liquidity over to Velocimeter. They did have a hiccup with I think their first epic flip. So the way that these DEXs work is every 7 days there are VE NFT holders that vote for where the emissions are going to be driven, like which liquidity pools will receive the native token. And the votes were all processed, but at the epic flip, there was a little bit of a breakage in the behavior of the DEX. So they had to essentially relaunch a set of smart contracts and call it Velocimeter V2, and that just happened yesterday. So a lot of the native ecosystem projects that were given a VE NFT like Canto Bank and Canto Inu and some of the other projects, like they weren't emissions, so they had to kind of start from scratch. So it's kind of cool. They successfully launched the V2 flow token. They airdropped VE NFTs to all the V1 flow or VE flow holders with VE flow 2, and things seem to be running smoothly. I haven't checked what the TVL is up to today, but some of the like big picture ideas that I've had about Velocimeter are it could become like, if they succeed on like their BD strategy across the Cosmos ecosystem, they could really become a hub for Cosmos app chain liquidity. Outside of Osmosis, there's really not a lot of volume for Cosmos native tokens outside of centralized exchanges. So you know, as we all know, liquidity is not loyal, and I could see a lot of liquidity being siphoned away from Osmosis and coming into Velocimeter. And as we know, like TVL has of Canto did surpass Osmosis recently. So um,
Yeah.
this is another reason for like if you're a Cosmos investor and you want capital efficiency, like Canto is going to provide that. And they've already started to see some of the tokens from like the ecosystem come in and start to bribe. So Sommelier Finance, I think they added a $22,000 Som token bribe to Velocimeter. So they're
Oh,
clearly
wow.
encouraging people to bring liquidity into Canto. So yeah,
That's
that's
super
one of
interesting.
the biggest DeFi TVL story on Canto right now.
Oh, wow. Yeah, no, I've definitely been getting into the midst of it. I've been getting mixed in. I did start providing yield on V1 before we had to do the migration, migrated my yield over to V2. Just kind of waiting for the printer to start going. I don't know if they've kicked off the printer for V2 just yet, but I've been humbly farming some flow. And
There you go.
it's been a really nice little DEX. It's been a great experience so far. Haven't had any rugs yet, so that's always a great feeling when I'm not getting rugged in the middle of a bear market.
Yep.
Okay, so I want to dig in a little bit deeper into that like thesis that you have there, because like for a long time, I think everyone in Cosmos is aware that Osmosis is finding itself in a little bit more competitive waters. For a long time, they have been the deep liquidity provider for the broader Cosmos ecosystem, and they have been the go-to place to go provide your liquidity and actually yield. But with the arise and the coming of like major products like DYDX, with even projects like Say Network kicking up, with them literally trying to rework the way that blockchains work specifically for dexes, there is competition on the horizon for Osmosis, and I'm not surprised to hear that there is a potential thesis for that happening in Velocimeter. But I just wanted to hear a little bit like, why do you think that this is going to be a continuing trend for Velocimeter, and a little bit of more just a breakdown on how you see Osmosis kind of losing a little bit of a market share there, because that's a really interesting little competition
Well,
being cropped up.
like we were talking about this before the show started. Um, Innovative DEX designs are hard to find these days. Like Osmosis's contracts are based on the balancer. I don't know if it's V2 or the original balancer AMM designs. So, it's a pretty basic DEX. I would say the most interesting thing they have going for them is super fluid staking, um, which is cool. You get a little bit of additional capital efficiency on your
Hmm.
Osmo tokens, but there's also some pretty big barriers to LPing. Like I'll give you a really concrete example of why somebody would not want to choose to LP on Osmosis. So they have specific bonding periods where your liquidity is locked in order to receive Osmo emissions, rewards for your liquidity. So you can choose, I think, a day or 7 days or 14 days, but people typically choose the longest period of time so they can maximize their rewards. Um, Last June, when uh, Terra was going through its death spiral, a
Hmm.
lot of the liquidity on Osmosis was, using UST as its base pair. So anybody who was providing liquidity in a UST based pool was fucked. They were stuck. I think I don't. I had a lot of money in there, unfortunately, and I learned a very hard lesson. Like a couple, like one, there's no such thing as a safe stable coin, especially one that's not backed by anything.
Yeah.
And two, locking has significant risks. And I certainly still lock tokens when it makes sense, but you just have to understand like there is downside, and if the native token has or the protocol has an issue, you're stuck for at least a couple weeks. Um, so those are definitely flaws in kind of the osmosis design. I don't know about any AMM improvements outside of like their stable swap feature.
Yeah.
And like you said, if there's like an easy way to fork a better execution model, like say the solidly bonding curves, which are low fee, high concentrated liquidity for stable swaps, low fees for volatile asset swaps, and you can just pull that from an EVM compatible chain, like and put it on Cosmos. You know, especially when you throw in a high APR and no lock, you're like already telling the market like this is a better place for your liquidity. I'm not following Say or DYDX. I know specifically, I like they seem to be more derivatives focused markets, not spot. So I think like Velocimeter is currently the best alternative to Osmosis. When you like realize that IBC enabled assets can be moved across to any of these app chains. The other thing about the solidly designed is I think it's just like a really nice way to make all the market participants happy. In Osmosis, it's like you have LPs that earn emissions and swap fees in, and then like the native token itself, like nobody wants to hold it. It's really just a way to pay people to provide liquidity. And like if you look at the chart, it's just down only. Like Osmo
Yeah.
token, it's a shit coin. And I love the product, but man, it's just not a good investment. In the VE33 solidly designed, it's like they've given real utility to holding the token. And that's through this locking mechanism where you vote for which pools receive emissions and where you receive fees from, as well as bribes. And, if
Makes
you look
capital a little bit more sticky. Makes it more
exactly,
encouraging to keep it there.
and there's definitely a Ponzi factor. Like you're locking tokens. There's supply that can't be sold.
Yeah.
That you can sell a VE NFT, I guess, but that's a whole other conversation. But the bribes have routinely eclipsed 3 figures on other solidly forks in like Optimism or on BSC or on Phantom. So protocols are realizing they can bribe and get a lot more bang for their buck in terms of increasing liquidity on these dexes. So Sommelier is probably like, we need people to LP. We need Joe and Evan to be market makers for us. So you're gonna get some of my token. You're gonna put it on this DEX. I'm gonna make it easier for people to swap. I'm gonna make it easy for people to buy with size. And the protocols themselves are happy because they get more people interested in the project. It's almost like a marketing machine. It's like, hey, check out my token. We're gonna bribe you to buy it. We're gonna bribe you to vote for it. Going to give me deeper liquidity. Yeah, it's a really cool DEX design. I've written about it in the past, but Velocimeter has this unique opportunity because of all these sad ecosystem, Cosmos ecosystem tokens that just nobody wants to pay attention to anymore.
Evan, do you have any questions here for the man? I've kind of grilled him on some deep DeFi stuff, so I'll stop nerding out here.
No, I mean, I just think it's interesting, the VE tokenomics. I remember before the crash of Terra Luna, one of the biggest topics that everybody was talking about was Astroport implementing a lot of these, VE sort of bribery type, I guess, what would you call them, incentives. So I'll be interested to see how it works out with Velocimeter. How would you say, I guess, it compares to the Canto? What is the native? Well, not the native DEX, but they've got that slingshot DEX. How does it compare there? And overall, how has the Canto community kind of accepted what I am going to just say is like a competitor to that DEX, and really the only competitor at this point?
Yeah, it's a pretty clear-cut distinction in my mind because the Canto native DEX, while the bonding curves, the swap curves are also based on solidly, they are basically providing essentially a free way to swap the most liquid assets and the most, the original assets that were listed on Canto from day one. Like it's ETH, it's it's ETH, it's Atom, it's Canto, USDC, USDT, and Note.
Note, yeah.
Outside of those, like longer tail assets don't have a place on the Canto DEX. Also, more exotic pairs, like if you wanted to get specifically a pool for ETH Atom, for example, like you're not going to get that on like the Cosmo or the Canto DEX. You'll
Is
have
that
to.
because of design? Like you can't put those towards vote? Like does it have to go through the DAO to get them included?
So in theory, yes. The DAO hasn't essentially been involved with that that roadmap yet.
Okay.
We'll see. I think there's been some proposals to add collaterals to the CLM, and since really nothing has changed since it's still such a nascent blockchain. So yeah, so I guess the point, the big distinction is Canto native DEX is for the big, deeply liquid assets for low swap, slippage and zero fees. Outside of that, you have the longer tail assets for Velocimeter and other DEXs. And I don't think Canto, the contributors really want to call it a competition. At the end of the day, the things that people will provide liquidity for are rewards and safety. You want your assets to be secure if you're LPing. You don't want someone to be able to rug you.
Yeah.
So that the Canto native DEX definitely comes with an extra assurance of security. Yeah, but we'll see. I think that the longer tail assets certainly have a home outside of the Canto DEX, and it should encourage IBC compatible stuff to come in.
Makes sense.
how I see it.
Yeah.
So
Small you're coming in and going in for bribes. It's really interesting. Oh, sorry, Evan, go for it. Your internet's
No.
being slow.
sorry, it's this damn ocean floor that's just doesn't have good reception yet. Can you tell me more about is the flow token the Velocimeter native token then, or okay? Because I'm
Yep,
like
yep.
a day one here. I've never seen Velocimeter before. So can you dive more into like the token and how it works? And I mean, is it mostly just for like voting and for incentives and stuff like that, or what's the mechanics there?
Sure. I will do my best in like a minute. So at its very basic utility, it's an incentive token for liquidity providers. It's paid for liquidity. However, it's also got utility beyond just incentivizing liquidity because you can lock it similar to how you were talking about the VE Astro or whatever. It's it can be locked for various lengths of time. I think the shortest lock is like a week. The longest lock is 4 years. And the longer you lock, the higher your voting percentages on the protocol. So if you just want to be, a flow or a Velocimeter token holder, you can buy and lock or farm and lock tokens. And in exchange for that, you get what's called a VE NFT. And the token is it's a VE flow. And like I said, the higher the length of time you lock for, the greater your voting power becomes. And I believe it's a exponential curve. So it really encourages longer lock terms because the size of your votes determine essentially the amount of fees you're enabled to, I guess the amount of fees that you're eligible for, as well as the percentage of the bribes that you can have for the pools you vote for. So every 7 days, if you hold VE flow, you can decide how to allocate those votes across all of the pools on the Velocimeter DEX. So for example, if I'm interested in fees, I just want to vote for pools that have very high volume. So Canto Note, for example, I may just say I'm going to vote 100% for that pool. If you're interested in bribes, let's just use some Sommelier for an example. Like I'm going to vote for that Som Note or Som Canto pool and get as much of the portion of those $22,000 of Som tokens as I can. And I'm a VE token holder on some other protocols, and I typically try to maximize my APR. So it's really going to come down to who's gonna pay me the most to vote for them. I'm totally a whore for the high bribes, and yeah, so it's cool because for the first time, it's like you have a native token that they call a valueless governance token that actually has utility and can get you some yield on a weekly basis.
Right, and you use the term VE NFT, which is the first time I've heard that term as well. Is that using then like the CSR from it basically what's the word, like routing the rewards into that NFT rather than just like a wallet that's has an LP position?
So the CSR NFTs are different from the VE NFTs. The VE NFTs were something designed by Andre Cronje back on Phantom during the first Solidly.
Frog Nation. Do you remember Frog Nation, Evan?
Oh, yes, I do.
So
yes,
a VE NFT is does not actually accrue rewards directly. It has metadata that essentially shows the size of your native tokens lock as well as the duration. So it comes down to like an equation for voting power, and they are transferable. So you can, a lot of the times these VE NFTs are sold for say like a 30 to 70% discount. If you just compare like the market price of the native token to the VE token. So if you have 100 VE NFT VFlow, let's say for 4 years, you might be able to sell that for like 40 or 50 flow tokens. So that's kind of how these work. The CSR NFTs, like Joseph kind of alluded to this at the beginning of before we jumped on, like they have incorporated CSR. And I believe anytime somebody makes a swap on Velocimeter, there will be some CSR that accrues to an NFT, but that's sort of a separate conversation. It isn't related to the VE NFTs.
It's a complicated world in Canto, and I'd love to get into a little bit of a like kind of a philosophical discussion regarding CSR, because just by the inherent design of the Canto decks and just inherent design of Canto, this is kind of a conversation that I've been wrestling with. It's just the concept of having or just purchasing into these different altcoins and expecting upwards price mobility. If you're speculating, like obviously, don't take this as financial advice. Most ecosystems typically have some form of altcoins, have their own little bit of a bull run. They accrue value. Typically, they get value from the native token of the ecosystem. I just wanted to hear your take and your overall thesis moving forward with contract secure revenue, because I do see there being a little bit of a complication when it comes to contract secure revenue and the launching of these different types of governance tokens or bribery emission tokens, where I see there being a little bit of a race towards zero when it comes to getting these fees. And I guess it's a little bit of a ridiculous suggestion to say that someone's just going to fork like Velocimeter yet again and just undercut their fees. But it is a thing, and it is a discussion to have in and of itself. Just would love to hear your thoughts there. What you overall seeing CSR doing to really kind of forge a new type of DeFi economy.
At its very basic description, I guess if you just want to make it simple, CSR has very little to do with how a project grows and captures new users. It's only a benefit given to good protocols. So if you're building something somebody likes and someone's going to use time and time again, though every one of those transactions that people are delighted to do on your protocol get passed on to an NFT, and that's CSR. So it's like, okay, I have this this kickback kitty, a slush fund, a rainy day fund, whatever. I don't have to do anything with it. I don't have to give it back to my users. I don't have to lend this out and get a loan against it. But I can. Like, I think at the end of the day, it's a nice to have, and it's an experiment. Um, like if GMX, like let's see, like we all love GMX. It's like
I'm a big fan of GMX. I
it's
love it.
it is, you know, it's achieved product market fit.
Hmm.
Um, you know, it's very early, but it's like the first time anyone has the real yield thesis kind of originated there and has since been validated. You know, if you're an LP or you're a token holder, you are getting real yield from trading fees and funding rates, etc. If someone were to design a kick-ass product and launch it on Canto, like let's just use GMX as an example. Like you could literally go back and I've talked to a few people in the Canto ecosystem. You could do like a retroactive analysis of like what would you have made if you had taken all of your transactions and created a CSR NFT. Like how much gas would have gone to that token, that NFT. And I think that's a really interesting case study because kind of going back to what I was first saying, it's like if you make a good product,
Hmm.
people are going to use it regardless of whether you have CSR or not. And like CSR is just a cherry on top. Um, does that make sense? Like explain to me
You're
where,
directing yield, a little bit of yield or a little bit of profit towards the developers of the protocol that
yeah,
then don't have to tie it to some form of token that's native to the protocol,
I
correct?
don't think any team on Canto knows what they're going to do with CSR when they start. And if you come in with an idea, I would encourage you to stop because we have only just started to scratch the surface of like the potential of a CSR NFT. Like I've talked to at least one team who's planning on using CSR to juice their velocimeter pool with bribes.
Hmm.
Another team is planning on juicing the yield, like the native yield of their protocol. So there's like, but there's just a lot of other ways. Like the reason that's it's so cool is because you can direct CSR to multiple NFTs. You could, which is like, and then you can take these NFTs and shard them off and you know do different things with them.
Yeah.
Um, you know, I just think we're only scratching the surface of like a really cool potential primitive. So, you know, I'm curious to hear like where you think like this goes to a race to the bottom.
I guess my race to the bottom just comes from the fact that some people will be extracting fees, will be extracting a certain amount of percent, and then someone else can launch a different protocol that undercuts that fee that is being redirected to those NFTs. That's
And
that.
the assumption you have is that
Yeah.
people are only building because of CSR, and that's definitely false. Like
Okay.
these teams are building for way different reasons. I would assume CSR is just a nice feature that Canto implemented, and again, like we're gonna see if it's worth kind of even acknowledging in the future. Like if CSR isn't meaningful, I think it
Hmm.
will be, especially for the bigger protocols. Then like people will just build on Canto because of the ethos, because of the TVL, because of the participants, because of the contributors. Like
Yeah.
that's way more important than CSR, if you ask me.
I mean, but for me, I think that the real value, and I guess we can discuss this. For me, the real value for Canto comes into when it's trying to reinvent the socioeconomics of like incentives for developers. I think that's where the
Sure.
real question and the real innovation happens. And I think that CSR has the potential for that. I'm trying to find a real case where someone has been able to manage to do that because I think that Canto has that potential to kind of redefine what it means to be socioeconomically aligned with your users. And so I'm trying to basically understand how and when someone will actually find a way to actively redefine developer incentives in a profound way. And I know that CSR inherently is not that innovative in terms of like tech stack wise. Near protocol has something rather similar built into their blockchain, but the real innovation with Canto CSR comes into the fact that it's automated. You can automate this ability to direct revenue. And I can't wait to see that be actually utilized to reinvent incentives for developers. I'm not smart enough to figure that out. I'm not a developer either. So
Like
I think
I guess that's what I'm here for when it comes to Canto is that reinvention of the socioeconomic layer of developers.
just to take it back to the GMX example for a second, I think GMX has this like what do you want to call it? This NFT collection that was kind of built in parallel with it, the GBC GMX Blueberry Club.
Yeah.
And the whole point of like no, hold on, sorry, I'm getting like an echo. The GBC Blueberries, I mean, it's just like this NFT profile picture collection, and there's some incentive to holding it. And I did have one at one point, but it was like so convoluted and hard to understand. And it was like you basically get free trading fees, but not really. And so I was like, all right, whatever. I mean, it's just cool. I'm just flexing a profile picture at this point. But it would be cool if like you had, let's just say you had a DAO or something that was building a protocol, and some CSR was redirected to like a profile picture collection like this. And then if you're a builder that comes in and you say, hey, I'm going to do, I'm going to develop the front end of this, or I'm going to do marketing, or, I'll build the smart contracts, like you almost award them a CSR, or maybe you make it contingent on like some sort of, development milestone. And then now it's incentivized. Now it's aligning incentives rather, because you're going to get a GBC PFP, and you're the developer of this Perps Dex platform. And the more people that come and use it, and the cooler you make the product, the more you make, right? And then it starts to even slip a little bit into like identity, because my GBC is smoking a cigarette and has a mohawk. He is like the developer for GMX, and you can see just based on maybe if I'm on Twitter shit posting and I've got like the official, the blueberry with the mohawk and this smoking the cigarette, like, oh, this person has an incentive to make people come and use GMX and trade on this platform, because literally I can see they own this NFT and it's on their Twitter profile, and they're earning the CSR from this purpose. So I think that's going to be interesting. I mean, I'm kind of just thinking out loud here, but is that kind of the way you see it as well?
Yeah, win launch,
Either
man. I'm all in. Let's mint.
Yeah, it'd be cool. I mean,
what I was just thinking about when Joseph said, talking about how this is going to manifest, like, I think it's going to really encourage DeFi composable like collaboration too. It's like, let's all hook each other up to work together, whether you're going to like direct liquidity toward my protocol, or I'm your crypto bank. Like, there's just going to be ways to work together where the incentives are aligned because of CSR. It's like our users are going to interact with your smart contracts, and we're just going to be like your sales funnel. And this is all going to come back to CSR. And then it's like, that's another way, the CSR could manifest, is like encouraging collaboration.
Yeah, I think it's cool. And I agree a lot with you about like the Legos and composability, like just to, I guess, compare it to like traditional equities. Just because a company increases revenue doesn't mean that their stock price is going to go up, right? Because there's all these other things at play where it's like, well, maybe they're going to, raise more money and dilute all the shareholders, or maybe they're going to decide to like spend a bunch of money on dumb shit, or, who knows, maybe there's like some scandal that happens at the top, and your share prices, you get punished even though you invested in maybe something that was fundamentally sound. And I think with CSR, it kind of takes away all that stuff, and it just makes it like purely like, hey, if you own this NFT, like you're a stakeholder in this, and your incentives are aligned, and it kind of throws all that other BS to the side. And now it's like, all right, well, how can we make sure that this, whatever this platform is getting more users, or as you said, like just working together and collaborating, and you give me a piece of equity, like pure equity in the usefulness of your platform. I think that's really cool.
A CSR DAO would be sick. Like, if like, let's just say you're launching a protocol and you want to launch a PFP alongside it, and each one of those NFT holders gets a vote. So like, the mint raises funds for the protocol, and protocol CSR gets directed to an NFT that is essentially controlled by this PFP picture DAO, and they can allocate the CSR however they want. But yeah, investments would be cool. I think in order for that to be like a reality, we need to start to see some of this meaningful CSR accrue. I know the Plex team is keeping track. I've unfortunately lost track of that website, but they're definitely trying to track all the CSR going on, and it's been slow, admittedly. So it's probably nothing to sneeze at quite yet, but as the market kind of picks up again, and some of these dApps start to get some TVL and users back in the ecosystem, like we'll watch to see how big it gets. I know Velocimeter has CSR. I know some of the other ecosystem projects that are launching soon are going to incorporate CSR, and we'll just keep watching.
Seems like right now, so far, I have the contract secure revenue website pulled up. It seems like 15,000 total Canto has been yielded. One specific contract is kind of leading the bunch. I'm not sure what project, but one project has yielded at nearly 5,000 Canto in total revenue. And that's not chump change in terms of like since it's been, and in terms of where I believe future valuation of the token and the potential for the ecosystem lays ahead. I think I haven't yet seen a real innovative use case of CSR NFT, and I think it's because of the complications when it comes to developing these types of things. I can't wait until we can actually see what gets built and actually kind of redefines that incentive and that developer realignment within a protocol. Evan, are you choking yourself right now? Because I'm a little concerned. Oh, okay. It froze for a minute, and on the frame that it froze on, your hand was like over your neck, and I thought you were choking yourself. I was very concerned.
That was just me giving a nonverbal cue about what I think of your opinion.
Well, I guess we can go ahead and move on to the next opinion here, gentlemen. Arbitrum. Arbitrum major token drop today. How are you guys feeling about that? RB season's coming in. I know I'm a fan of the Canto EVM just as much as anyone else in this room, but I'm also a fan of what's going on in Arbitrum. Do you guys have any takes there?
About time. The biggest tease in all of DeFi. We finally got a taste. ARB. I was hoping for RB, but ARB is what it is. It's a finance term. We all try to ARB when we can. But I remember it's probably 5 or 6 months ago, one of the Arbitrum team members tweeted like, wait for the main course. And this was after the Optimism airdrop. And I was like, so they're going to do a token at some point, but they kept leading us on, and we were waiting and waiting. And how many times did the ecosystem pump? Like every token would just go,
Oh yeah,
20% overnight. You're like,
every
oh,
alt.
this has got to be it. Somebody leaked it. And, dead air silence. And like Size Chad was giving us all like blue balls about ARB. And eventually, like out of the blue yesterday, some people started tweeting like, oh, Arbitrum tomorrow. Like I think it was Pentoshi. His guy's got like 500,000 followers. He's like, I'm longing magic. I hear the Arbitrum tokens coming. And I was awake this morning at 6 o'clock and happened to see a Twitter notifications just go crazy. So it's here. And as far as like takes, it's probably gonna be what's already like it's in the top 5 in TVL, right? As far as chains.
Yeah, if you do some FDV, if you look at the token value, I think it's around $1. Evan thinks it's a little bit more. I don't know what you did in the math there.
I think it's more because if you look at Optimism, no offense to any Optimism holders that are watching or in the call, but
It's okay.
I've never fucking had any
people.
reason to use Optimism, and I have no idea what. Like I looked at the Optimism DApps, and it was all shit from other chains. So
Yeah.
their FDV is like 10.3 or something billion, and I was like, all right, Arbitrum I think is a little bit more useful, and like GMX pretty much, like
Arbitrum
is Arbitrum.
Yeah, largely.
Arbitrum has achieved like product market fit, high TVL, and has very good builders without any token, which is impressive. Optimism has the kind of the SNX cartel that have deployed some of their their protocols and Velodrome, which has done
Yeah.
very well because of the it was the first successful like solidly fork, and they also got a ton of OP incentives. So, you know, but like you're right, Evan, the Arbitrum ecosystem is vibrant without any kind of incentives. And I think one of the shitty things about the ARB airdrop is that they only gave 1% to ecosystem partners. So, you know,
Who's considered an ecosystem partner?
like a protocol that's building like a
Like
GMX.
Interesting.
So it's like, way to thank the people that made you guys so big and badass. It's like, we're gonna give you a piece, like a little 1% of this the supply, and you can fight over it like dogs between the 3,000 of you. So we'll see how this actually plays out as far as who gets how much and where it goes. The investors also got a pretty big chunk of the supply. So congrats on everybody. Congrats to all the VCs who invested, you know, when it was a I think their Series A was like a 1.6 billion valuation. And the last I heard, it was around 13 billion. So I'm assuming it's going to be a 30 to 40 billion fully diluted value when the token eventually launches. So I'm keeping that in mind for whether I buy more or I sell my airdrop, because I had a really chunky airdrop. I've been playing in the Arbitrum ecosystem since like the Nyan Ponzi DEX launched back in, you know, it was like the
Oh,
first.
that's an old one.
Oh yeah. So I'm happy to hold on to those tokens, and because I assume that they're gonna be valuable. Holding the OP airdrop was also a good call. So yeah, I'm happy. I think it's a nice way to reward the early users, and hopefully they're directing some of those DAO tokens to future builders and protocols that can keep expanding the ecosystem, because they've done a really, really good job without any incentive so far.
I'm pretty happy with my airdrop as well across a couple different wallets. I started using GMX back in May or June, whenever everybody thought KuCoin was gonna go under and steal everybody's money. I checked most of the boxes. The only one I didn't know about was Arbitrum Nova. I don't even know what the hell that is. And I was like, I wish I would have known what this is, because
It was
I only needed to do 3,
they did
5,
an
or 10
upgrade.
transactions.
They did an upgrade at one point. And I'm forgetting which one was Arbitrum Nova. I think Arbitrum Nova was the updated version. So like there was a pre-Arbitrum and then there was a now Arbitrum. So if you were
Joseph, you're talking about Nitro. Nitro is
okay, so I'm wrong then. Never mind.
Nitro is the upgrade that reduced fees and increased transaction throughput.
So then what was Nova? What was Nova?
I don't want to, I'm going to screw this up. I feel like it's a layer 3. It's sort of a side chain off of Arbitrum I think they're specifically for like gaming. So it's super, super high transaction throughput. And I feel like they sacrifice security for that. So there was maybe one NFT drop that did something with the Nova chain. Yeah, layer 3 is probably the wrong terminology, but it's a side chain that's built on top of Arbitrum.
Okay.
I will just say, you know, using, not to shit on every other competitor to Arbitrum in 10 minutes, but having used, like I was using Gains for a while, well, I still use Gains now, but I started using them when they were on Polygon. And I was really happy when they made the move to Arbitrum, because just using Arbitrum, the fees and the speed at which you can kind of execute trades is like unmatched. And Polygon, I mean, I've gone back just to like basically get my assets out of the boat, and it was like, holy fuck, this is such a nightmare. Like, it's so slow.
Very nautical themes today, Evan.
Yeah, well, hey, I'm a sailor now, so I'm going to continue using these sailing words so that
another thing that I noticed on this ARB airdrop is two groups of Sybil attackers
Oh yeah.
got completely hosed, thankfully. The first group are the people who minted the RB NFTs, and Arbitrum, nobody got a token regardless of how many of these little fake, stupid NFTs you got. The other was like Arbitrum Odyssey, the campaign where you basically had to interact with different protocols and join different discords and be on these calls with the Arbitrum marketing team. And that actually broke Arbitrum the first time they tried to do it, and they had to pause.
Yeah, I remember that
the campaign. So that's when they finally deployed Nitro. But at the end of the day, it's like Odyssey was not part of this airdrop whatsoever, and we'll see if that ends up coming back around for kind of this DAO token allocation. But so yeah, if you spent time trying to Sybil this, like you wasted a lot of time.
Just to, I guess, quickly go over kind of how you did qualify. If you bridged to funds into Arbitrum 1 or into Arbitrum Nova. So I guess Arbitrum 1 then is like the main Arbitrum, right?
Yes.
Transactions over time, if you've done anything in the last 2 months or more, 6 months or more, 9 months or more. Months, 10 months, 25 transactions. Fuck. Can you hear me?
Yes, every now and then.
I don't know what's up with it. I'm not even that far from the router. I don't even understand.
Are you Ethernet? Are you on Ethernet or are you on Wi-Fi?
I'm using like Space Link, but under the ocean. C-Link. I'm using C-Link. Transaction value was another one. So depending on how much aggregate value you transacted with, and then assets bridged to Arbitrum 1 or Arbitrum Nova, which was the one that I was like, what the hell is this? But I thought it was cool how they spread it out and made it, pretty thorough in like you said, not like dumb Sybil attacks where you minted a fucking NFT and, got free money for it. So we'll see how price action goes. I think the drop is next Thursday. So
yeah.
And I'll be interested. Does anybody know, like, how do we figure out where the liquidity is going to go? Is someone going to open up a Uniswap pool for this, I guess, or what?
That's my guess. Yeah.
It'll probably be on Uniswap.
They won't be picking favorites as far as decks go, but I guarantee you every single one of the Arbitrum native decks is going to have a incentivized pool for ARB.
Interesting. There's going to be some good juicy yields to start off there, but if you're willing to bite the potential and permanent loss that you're going to experience there. So
yeah, and just to kind of keep people interested in like potentially providing liquidity, there's a few solidly DEX forks that are active on Arbitrum. You've got Sterling Finance, Excalibur Finance, Ramses. Those are all live right now. You also have Camelot, which is not specifically a solidly fork, but it's it's a good DEX with like some pretty cool tokenomics. And then there's another one launching called Kronos. It's another solidly fork. So there's going to be 4 solidly forks. Oh, and I think it's like Slizzard Finance is another one. So 5 solidly projects that have.
I'm glad that there's a diversity of products going on Arbitrum right now.
Yeah, and that tells you one of 2 things: like being in the DEX business is good, and people really like this VE33 design. So.
All right. Speaking of Arbitrum and speaking of like different things that are happening on the ecosystem, it's time for the flip side insight of the week, boys. It is time. We're going to be chatting a little bit about what's going on Arbitrum, even deeper, getting into the data here. So I'm going to be sharing my screen. Actually be able to look at a nice little dashboard that dove into what's happening on the ecosystem. So shout out to DeFi Mochi for compiling this. DeFi Mochi, one of the greatest analysts out there on Twitter, has about 30,000 followers. And this dashboard actually dives into the different types of protocols that are having massive market share. I know earlier today we kind of memed that GMX is Arbitrum. I feel like this dashboard really kind of kind of communicates that. It really lets you know that GMX is the entire ecosystem essentially. If you look at the fee shares market, Arbitrum itself has yielded less fees than GMX related fees. That is just mind blowing that the network itself is not getting more fee share than an actual native protocol that is GMX.
It's the fat app thesis, Joseph.
The fat app thesis. It's happening. It's making the protocol. It's making that layer really fat, and it's all going towards that one protocol. And when I mean, I guess it just goes to show what happens when you build a DeFi protocol with a product market fit on an actual like roll up, and when you're not building it on the native network. It just goes to show when you build something with real yield, it's going to be yielding. It's going to be having that market share domination. And as you can see here, deposits are going to be going up. This chart is not titled, unfortunately, so don't know exactly what this one's communicating. But there is one more chart that I want to go over here just quickly. It's mostly this one right here, where you're looking at TVL against DEX volume. As you can see, TVL has kind of just been going by itself. I mean, TVL has been just dominant in general. But the DEX volumes have kind of remained a little bit pretty low. Recently, they kind of just pumped pretty significantly. I wonder if this is because people got whispers of a potential airdrop coming in.
No. You know exactly what that is. What were you doing?
What happened?
Were you doing on Friday night?
What happened here? What happened? Oh, wait, were people shorting? People were getting rid of USDC probably.
That's right.
Oh.
That was the dreaded USDC peg.
Okay, that's actually really funny to be seeing how many people flock to the at $1.12 billion worth of liquidity went flocking towards DEX volume. That's actually insane just to be witnessing that and just to see how that's happening and playing out in the ecosystem. And if you look at the fees again, I mean, you can just tell GMX is just in a league of its own. We have Arbitrum, sometimes the actual network itself kicking in here, trying to compete with GMX, but largely at the end of the day, this dashboard is just going to let you know how massive GMX has been. And if you want to look at what's kind of like second place here, you can actually remove GMX from the pot, and you can see what the other smaller protocols are going to be actually yielding some of the fee market share. Solid Lizard, Hedgic, I believe is how it's pronounced, and then Cyberswap. I've definitely heard of Cyberswap. I know there was a little bit of a farming season going on over at Cyberswap at some point. But yeah, that's kind of what's going on Arbitrum. Do you boys have any comments there?
Shout out to DeFi Mochi, Giga Chad. Keep making your dashboards. We love you.
Yeah, these dashboards are really insightful. They give me a little bit more of a tool when it comes to actually go into Arbitrum ecosystem. I actually get to make a decision of like, what's going on here? Obviously, I already knew about GMX as just an asset. It's really interesting to see it visualized at how impactful it is, and really kind of solidifies that whole fat protocol or that fat app thesis that you mentioned. But yeah, all right. That concludes this week's Flipside Insight of the Week. Thank you guys so much. I'll be sharing that link to that dashboard in the chat.
Nice. Very cool.
I like the dashboard. It's nice.
Quality dashboard. It looks pretty. We have a
I like
nice
that it shows that. I like that it shows that Gains is pretty much in second place there, because I was an early Gains supporter, and I've got bags. I've got bags.
Don't get me wrong. I like the diversity of assets on Gains. Like it's a really nice diverse asset. And I think it just shows kind of the different approaches for the two different types of trading platforms. GMX has to have that native liquidity on chain, has to have those people willing to provide that liquidity on chain. So kind of limit what assets you can offer there. But you also have a superior experience when it comes to being able to actually trade on that. So
yeah, keep your eyes open for Vertex as well. Our old friends from over in Terra Luna land. They never actually launched. I think they had a beta going on, testnet, and they're going to be order books. So there's not going to be this like trade against the LP type model. And rumor on the street is they're attracting some great liquidity and market makers for the order books to have good depth. So
is that the one that that's launching on Say, correct?
No, not to be confused with Vortex. This is Vertex.
Vertex.
Yes.
Okay, the two different.
A one-letter difference.
I know that Vortex was Vortex used to be a protocol on Canto or on Terra Luna, and they retrograde. They used to be retrograde. Now they're Vortex they're Vortex now, and SushiSwap actually the SushiSwap actually acquired them. So that's pretty massive.
It's
Excited to
amazing. Just say that you're launching a perp stacks and you'll get acquired. You don't even have to do any. No, I'm kidding.
Yeah, you don't have to know how to build that stuff. It's ancillary. All right. Do you guys have anything else for today's show? You guys want to shill out there? Evan, do you want to shill anything about what's going on in Obi Land? And then Adam, you can shill anything that's going on over at Four Moons.
Yeah, we just launched account abstraction stuff in Obi Labs. So if you're interested, we're live on mainnet with Terra and Juno. We can pretty much, so without going too far down a rabbit hole, Obi Labs is really just meant to be like a demo area for, enterprises to come along and use some of the stuff. But if you're interested, we just launched inheritance, session keys like for gaming and trading, a bunch of other cool stuff. So check us out on Twitter, Obi_money_, and you'll see some of those cool modules that we've launched.
Beautiful. Adam, what's going on over at Four Moons World?
So Four Moons is the number 4 up on the Canto Valley.
You guys are back? Nice. I'm glad.
I don't think, it should be illegal for us to move up or down now. We're just going to plant our flag at top, number 4. We still encourage you guys to pay attention to some of these hackathons that are going on. Season 6 is ongoing, and the presentations are this weekend. Last season, there were, I think, 150 different teams applied, and they had to whittle it down to a kind of 2-weekend runoff. And I think 20 projects were acknowledged, and maybe, several were awarded prizes on Canto. But yeah, it's a really good way of like sourcing alpha and following early projects that are coming to the ecosystem. Mm-hmm. So yeah, that's what's going on. Otherwise, we are heads down doing a lot of research. We think the crypto market is looking very good as far as, allocating money over the next several years. We're going into some pretty big catalysts for Bitcoin. Not only do we have the halving in 2024, we are seeing, a kind of a crack in the global banking structure, and self-custody has never rung so true than it does today. So we're all in the right business, guys. DeFi and Bitcoin are more important than ever. So yeah, we're just we're cracking the whip and making sure we're on top of the latest and greatest and best protocols.
Famous last words. Last time I was bullish crypto, I ended up losing and having a DPEG happen. So obviously nothing we say on the show is financial advice. Thank you guys so much for joining us. Check out Ace the Book on Twitter. Check out Pantera on Twitter. Check out Casa Intern on Twitter. We'll see you guys in next week's episode of The Byte Show. Take care.
Hey guys.